welcome to our kickoff edition of What the Flow, where we take a look at significant monthly ETF flows and trends for the prior month, as well as look at the hot or not hot ETF for the week. Today I'm joined by Henry Jim, who is part of the Bloomberg ETF intelligence team. He's one of the analysts there that started about 8 months ago. He's based in Zurich, Switzerland. It's great to have you here, Henry. So your team is obviously well known. Like, you guys have people in Asia, you're obviously in Europe, and you have the US team. And you guys do an amazing job with, articles, reports, analysis, flow information. So this is why we wanted to have you, you guys as part of this new kickoff series. And I just wanted to get feel from you in terms of, looking at the numbers for the month of August. What are we seeing? And is it, June and July, we know were not so great months for European ETF flows. August is always a slow month in terms of trading. So what are you seeing in terms of ETF flows for the month of August?
Hi, Andrea. Again, thanks for having me on. In terms of flows, you're absolutely right. June and July are pretty tough months. We had outflows of $1.5 billion in June and outflows of $3 billion in July in European domiciled ETFs. Despite the summer doldrums, we see a sort of a turning point. In August, we saw inflows come back in to the tune of close to €1 billion. Right? These were mainly into fixed income, though. So what we're seeing is probably market taking a view on no more further interest rate hikes, either in the Eurozone or globally.
I think when it came out for June and July that we were in negative flows, I think that was the first time, at least in a very, very long time, that Europe had outflows for the month. So good to see that we're back in the green. So one of the other things, you're well known for, you do a lot of tweeting, especially for ETF filings, which is really cool to see. And this past week, I noticed that you tweeted a number of single stock filings in the US. So I'm just going to read this off here. So Direction had 6, and I believe that they're launching some products this week. There were 65 from the Uno Shares brand, which is new to me, and Roundhill with 13. So I'm curious to, because you're doing the tweeting, you're following all this. Like, what are your thoughts on this single stock ETF trend that's happening in the US?
Not to go too much into history, but as you know, single stock ETFs first started in Europe in 2017, and they started taking off in the US after the Rule 18F4 came into effect, the 40 Act, allowing these sort of products to be launched in the US. My thoughts about these, I think there's different use cases in Europe and the US. As you know, in Europe, they're more of access products. Besides the inverse and leverage products, which are for traders, you have the tracker products, which are one-to-one and allow local European domiciled investors to access high price per share US or other stocks around the world. In the US, what we're seeing is ETFs that are filed. There's many different kinds, but the bulk of them, most recent filings have been centered around non-US stocks that don't have a sponsored ADR. So these are really access products into overseas products. Initial batch were leverage or inverse, but we don't even see that. These are all one-to-one right now, the bulk of them. In terms of what I think about them, I think it's some people are saying that they might be going up against ADRs, but there's a lot of tax and cost issues involved in ADRs, as well as these single stock ETFs, which are all swap based because of the 18F4 rule. So I think the whole game still has to be played out to see what's going to happen, and we'll be seeing a lot of the ones that have been filed. We'll be seeing them launching before the end of the year. So really, really looking forward to how it's going to pan out.
And then finally, so we like to talk about in this series, pick an ETF for the week, just to chat about and kind of get your take on what you think about it, as well as what we think about it. But so obviously, we write a weekly newsletter and cover fund launches, closures, updates, things like that. And one of the funds that stuck out to me was a US product that's being launched. I believe it was this week, or it might have been last week, but it's K-pop, which is the ticker for a product that was launched by Exchange Traded Concepts, and it's covering the Korean entertainment and K-pop industry. So very niche, obviously, market. And I'm curious to get your thoughts on whether you think this is something that's going to be, attractive to retail investors, if it's something that's maybe just too niche of a market and might have a hard time gathering assets? Just what do you think?
Oh, that's funny. It actually listed last Thursday, and I think it did pretty well in its first day of trading in terms of volume. I think it's a great idea. It really shows the spirit of what ETFs are, bringing hard to access or thematic themes to investors, retail investors. However, when you take a look at the target market, not that many people know what K-pop is in the U.S., but it's launched in the U.S. I think for those who know, it might be an interesting buy, but I think the target market for this is not very clear or hasn't been well defined. Well, at least not to me anyway. So I think if we were to look at how do you define a successful ETF, that would be a function of trading volume and assets gathered. I think the addressable investable assets for this fund might be fairly narrow. I think the only two areas where they can address assets would be K-pop enthusiasts in the US with money to invest in. So if we're talking middle school to maybe university year people, I mean, I don't know how many investable assets they have, but then maybe you might have Korean retail institutional investors too. I understand that in Korea, they have fairly good access to the American capital market, so they might be a target market.
I love seeing these new products come out. It's pretty cool to watch and over the next coming months to see how the trading volume goes and if they do attract what I would assume would be a retail market. But as you said too, like the institutional space in South Korea, that might be successful as well for them.
Well, how about this? If they're able to gather $1 billion by this time next year, we'll both do the Gangnam Style in your next video project. How's that?
Yeah, exactly.
I think it was something like this, right?
Yeah. I'm not the best answer, so I'll let you take care of that part. But
yeah, these are hard to say, really. You're absolutely right. We call them niche, but sometimes it might surprise you. For example, remember the cybersecurity ETF? Things happen, and a single guy launched the ETF out of his bedroom, and there was a hacking again by actually, I think, North Korea, actually related to the Korean Peninsula, and suddenly his cybersecurity ETF really took off. You never know.
You really don't. We wish the best for them, and we'll keep an eye on it. And for those of you who are watching, if you'd like to watch more videos like this, you can go to our website, which is blackwatersearch.com. And thank you, Henry, so much for joining and for participating in our first kickoff series.